Away from the banking sector but still in the financial services industry, the Kenya Union of Savings and Credit Cooperatives, KUSCCO, has announced that Kenya will in October convene an inaugural summit that will bring together savings and credit cooperatives from across Africa. The conference will brainstorm on how SACCOs can tap alternative sources of capital in the face of the prevailing liquidity challenges facing the SACCO movement. K24's Migwe Mwangi reports.
While commercial banks turn to the central bank as a lender of last resort for extra liquidity, savings and credit cooperative societies, on the other hand, depend on a 4 billion shillings interlending facility dubbed the Central Finance Fund, which was set up by the Kenya Union and Savings and Credit Cooperative Societies, KUSCCO, in 1989. But according to the SACCO Societies regulator, even the 148 billion shillings that SACCOs are currently borrowing among themselves is too little to meet the growing demand for credit for their 1.8 million members across the country.
When we established the SACCO Regulatory Authority, the rules and the law, I think we did not think about where SACCOs will borrow from when they run out of liquidity.
As a result, SACCOs have been on the receiving end of the high interest rates that have prevailed over the last 9 months, as they have had to borrow from commercial banks to meet the funding gap, repaying that money at interest rates that are far much higher than the rates at which SACCOs lend to their members. The SACCO movement now hopes to have at least 2/3 of its funding generated from within, with KUSCCO projecting that its Central Finance Fund will be more than double to 10 billion shillings in the next 2 years.
By 2015, we should be in a position where SACCOs are basically relying on internally generated funds within the movement.
To further address this situation, a 2-day summit for SACCOs and cooperatives in Africa is set to begin next week in Nairobi. The summit will mainly explore alternative sources of finance that for SACCOs and cooperatives can use to stay afloat in the years ahead.